Hi, everybody. Welcome. My name's Rebecca Mendoza, and today I'm shining my business spotlight on Scott Hoolahan with Loan Depot. Welcome, Scott.
Hey, how's it going, Rebecca? Thanks for having me.
It's going really good. I'm glad you're here. So today we could talk about a million things because I've known you for a very long time. You've done a lot of loans for me, and you've helped a lot of different segments of my client list. But today I really want to hone in on the seniors and what you could do with them and what you got into this area for. Like what drew you to working with the senior community with loans?
Well, again, thanks for having me. And I think that the passion for this really came of a number of conversations that I had had with people that are in a number of different service areas that focus on helping seniors, whether it's in insurance or other related caregiving and that sort of thing. And how many of our seniors, for one reason or another, economically are displaced from the home that they love and the
Yes.
home where they really want to age out. And a lot of times there's equity in that home, and that can be the bridge and the financial tool by use of that equity that could help them do what they want to do, and that's age in place. And the
Right.
reverse mortgage is that tool. And it's every instance that I've been able to um, help a senior or couple with that tool to access their equity has got a story with it that just has a great ending, and I love being a part of that.
Well, I want to talk specifically about a couple different scenarios, just so people know what it is. And you opened my eyes to something. So people know me. I help people buy and sell homes and move. A lot of times people don't want to move, but they feel like they need to. And so I have found out through you that moving doesn't have to be, they don't have to move out of their home. They can edge in place. And can you just talk very briefly about like what does that look like if somebody wants to stay at home, but they're very tight on funds and all of their money is tied up in their house?
Yeah, you bet. And then I think it's important because of what you do and do so well is um, and this is the first question, right? Is it the forever home? Because if it's not, the reverse mortgage can be used to buy the forever home. It's like a really good, well kept secret in the real estate world is that, the reverse is thought of as, well, that's the place to help them age in place. Absolutely. But it can be used to purchase a home as well. So we'll talk about that. But primarily, if someone has lived in a property for a number of years, that's probably the place they're most comfortable with, right? That's where their network of friends is. And if it meets the criteria, and I think that's the most important place to start, is it the forever home? And if it's not, the equity in the home could be used to make it the forever home, right? I've actually had people put
Oh,
elevators in homes and put ramps in homes and make some pretty dramatic structural changes to make it the forever home
right. Hmm.
by use of the equity that they can get from the reverse mortgage. But
Hmm.
really, that's the first question. And if it is the forever home, right? If it's one story, it's maintainable, right? It's the property is maintainable by the senior or seniors. Then then let's look at it. And if the mortgage is low or there is no mortgage, then the reverse mortgage is really based off of three components. How old is the senior? What's the value of the property? And then if there's an encumbrance, what is that? What's the amount of that mortgage, right? And then and by a formula that is heavily weighted on how old they are, we can determine how much equity they can tap to take care of any number of things, which is starts opening up all kinds of creative conversations, right? Including reinvesting in the property to make it the forever home,
Right.
right? But it's the basics are in California, you could be as young as 55.
Hmm.
Standard age for a reverse mortgage is 62. And then the numbers come into play, right? What's the
Right.
property value? So we're always going to do a full appraisal of the property to figure out what is the equity. And then once we know what equity is, then we can start talking about, well, how do you get that equity? You could take it in a lump sum. You could take it in a monthly income that can last for a period of time or
Hmm.
for the senior's life. You could take access of a line of credit where you get some money now and then the line of credit grows over the life of the senior's life while they're there, which is really unique, and it deserves more time. But the line of credit is really, I think, one of the best choices seniors can make because it gives them access now and then access to more equity over time, but you're not quote unquote being charged for the money you're not using. And
Hmm.
and unlike any kind of traditional line of credit, that line continues to grow and
Right.
it's never going to get taken away, right? You
Because
and
of
I
the
both have
equity.
been around long enough to see home equities, evaporate, get closed, um, because the bank decides that the market has changed to the point where they're not going to continue to extend those lines of credit. And they do have the right to close those, eliminate them,
Right.
reduce them from one amount to the next.
What I hear you saying right now is options. Like I hear options, and not one situation is the same as another. But I also want to talk about what the elephant in the room is, I think, for people when they think of senior mortgages or reverse mortgages is predatory loans of the past. So people are concerned that it is that they might lose their home and be kicked out should the equity or should the value decrease. But can you talk very briefly about what goes on with that? Like what that, talk about that concern.
It starts with right around mid late 80s under the Reagan administration. They, together with HFA, HUD, took ownership of the reverse mortgage and architected a number of regulations, requirements that were all set up to protect the homeowner, ultimately the senior, right? Number one is it's a non recourse loan. You and I have talked about this. Simply means that at the point where the senior no longer lives in the home, and that's basically the finality of the reverse mortgage. If the property is not worth what the encumbrance has accrued to, the heirs, the senior's estate cannot be liable for any deficiency. So the loan being a non-recourse loan means that it's going, any encumbrance and any debt on that is going to be isolated to that property only. So, there were instances in prior to that where a bank or a financial institution could cross collateralize and now they could take the farm, they could take other assets that the senior might have or that are now the heirs. And so those protections are all put in place so that the math is all about the property itself and the value of the property. And so in addition to that, there are a number of regulatory requirements that impose education on the lending senior,
Mhm.
and their heirs are welcome to be a part of that, right? So that there's waiting periods and cooling off periods. I'm required to make full disclosure at several different points during the application processing process to make certain that the senior is aware of what is their obligation. And I'll wrap up with this. There's four things, right? You got to live in the property. You have to
Mhm.
call it your primary residence at least 6 months and 1 day of the year, because you could
Right.
have a second home with a reverse mortgage, right? Some of your equity in a reverse mortgage might be used to go buy that second home.
Right.
That's great. So you have to live in the home. And then the other three things you're doing most likely already, and that's you got to pay property taxes. We all have to do that. You have to keep homeowners insurance on the asset. You want to do that anyway. And then if there's an HOA, you've got to pay that, right? So you've got to maintain the property, you got to take care of the property. You live in the property, pay the property taxes, pay the insurance, and maintain it. Pay the HOA, take care of it. You can live there the rest of your life um, with no mortgage payment monthly, no obligation to pay the bank. In fact, they're paying you in all all relative purposes, right?
In perpetuity while you.
Perpetuity, yeah. I mean, if that's what I would say, hey, if you're lucky enough and you take care of yourself, and you live to be 105, I think today there was a woman who was running a church, a school church. She died at 106 today. Um, hey, if that's your good fortune,
Yeah.
and at that point the bank is upside down, meaning that the mortgage is accrued, the interest is accrued to the point where it's greater than the value of the property. That's the bank's problem. Heirs are not going to be responsible. Nobody's coming after anybody. Um, it's over, and it's the bank's issue. They have to deal with it. It was a gamble they took, and you outlived the mortality table on that particular loan, and that's it. It's done. No, and nothing else that the senior has as an estate is going to be responsible or encumbered to pay back any portion of that loan.
Let's, speaking of heirs, I want to ask you one more question and then we'll wrap it up. And we could talk about this a lot in future videos. But you shared a story with me about, well, first of all, in speaking to heirs, I know sometimes that can be the concern. Is the bank going to take the house afterwards? Will the heirs, the children, not get anything? And you shared a story with me about doing reverse mortgage, pulling equity out now to help those heirs buy their house today instead of when they pass away. So, not waiting for mom to pass the money down, but instead be able to do it today, help your children buy their home and everyone can enjoy it, and then they can start building equity in their own home now instead of 15, 20 years from now when mom passes. Talk about that real fast.
Living inheritance, right?
Yes.
So, to your point, I had a client, home's worth a little over $2 million in beautiful Santa Barbara. Obviously, she'd lived there her whole life in that home, and who wouldn't want to stay in a home in Santa Barbara, right? So she was able to tap a little over $700,000 in equity, and then with that money she was able to help a grandchild pay off their college debt. I mean, it raises the hair on my arms when I think about all the cool things that she was able to accomplish and be a part of today. Look, she saved, I don't know how much money in interest by helping that grandchild pay off their debt, take that encumbrance out of the way, and allow them to get a jump start on life, to go buy a home, go do whatever they're going to do. But that burden of debt is gone,
Hmm.
right? and then were able to take several $100,000 and divvy that up between her children and help them make purchases. I think one of them might have been an improvement to their existing home. Another one was to help them become a homeowner. And I think the thing to think about there is, look, we could probably all agree home prices are not likely to go down. So, and there's another aspect of life that's a big cost, and that's taxes. So those two things are not likely to go down in the future. And in this instance, this was a healthy young senior that had a vivacious life. And I hope and I think she's probably going to live the long, long time.
Mhm.
Well, in let's say that's 20 years, let's say that's 15 years. The buying power of those monies that she gifted today is going to be far less down the road. And she's not going to be a part of that. Her grandchild, again, saving thousands of dollars in interest charges
Mm.
and not being burdened by student debt. She's going to be able to watch that happen. So, really, the impact of those monies being used today, it's really hard to even put a real value on it because of those unexpected changes in the cost of living, cost of housing. And again, that living inheritance enabled her to be a part of those events now. Nobody's waiting for her to die. In fact, now, they still get to visit her in that home where she's comfortable, and that they all have memories in. That home's not going anywhere. And then here's the end of the story is that let's say that at some point, and maybe it's 10 years, maybe it's 5 years, and she's been a part of all those things. Now she's no longer living in the property. Whatever that property is worth, absent whatever the accrued interest on that $700,000 that she was able to get at this point and give away and gift, whatever that difference between that and what the house is worth in 10 years. And there's an amortization table that we use that gives a very conservative look into the future. So let's say now that house is worth 3 million in 10
Mhm.
years and the total encumbrance has gone to $2 million.
Right.
The heirs can sell that house and that $1 million goes to them, right?
Mhm.
So whatever the current value of the property is at the time that the heirs liquidate it, and again, they've got options, right? So uh, they've got about 6 months from the time that the senior is no longer living in the property, and that might be that they have passed or that they've had to move into a different type of living environment, be it a residential care or whatever that might be. At the point where they're not living in the property full time, 6 months, 1 year, 6 months and 1 day, then the heirs have the right to sell that property, or they could come to me and we could refinance the property. Maybe one of the siblings decides, I want to live in grandma's house. I want to live in Santa Barbara. And so they would qualify for a loan on that encumbrance, $2 million loan with a $1 million of equity and get a new current first mortgage and go
Start
on.
from scratch.
Yeah. Yeah.
Well, great. So if anybody wants to explore possibilities with you, look at different options, what's the best way to reach you?
You could just go to reversescott.com. That'll take you to my website. You can send me an email. You could call me. I pick up my cell phone, 805-901-7373. All you got to do is say, Rebecca Mendoza sent me, and I'll treat you like the friend that Rebecca has been to me. So yeah, just give me a call or go to reversescott.com and you'll go to my Loan Depot website and I'll be waiting there to help you.
very much for all this information. It's so great. And I can't wait to share you with more people because I think that this is so needed in, today's climate. I really appreciate everything that you do for your clients, for my clients, and for the community at large. So can't wait for the next one.
Have a great day.
Thanks.